Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me virtually this afternoon, we have Ellin, Chairman and CEO of LiveOne, Jesse Kirshbaum, founder of NUE Agency, and Andrew Rossow, digital media attorney at Minc Law and CEO of AR Media Consulting. We're here to discuss digital entertainment innovation monetization strategies and the impact of current and future regulation. It is great to see all three of you again. Welcome back to Trade Talks. We have a lot to get through here, and we'll kick it off with you, Rob. I feel like when it comes to monetization models, we were really at a key inflection point here.
Sorry, guys. From our standpoint, LiveOne, we're really excited about the combination and protecting our franchise, in that we have a fast-growing subscription business, which will do $75-80 million this year, and a fast-growing advertising business that'll do probably $55 or $60 million in revenues. And then we've created so many new ancillary revenue streams off of that we like to describe as taking superstars and their super fans and looking for ways to monetize them in as many ways as possible. So we've started a celebrity brands division, and we continue to look at those opportunities. And I think it's really important for companies to be looking at multiple different revenue streams and keep growing them.
Right. And Jesse, that's a great segue into the question I have for you. It doesn't seem as if it's a one-size-fit model for all streaming services, and they really do have to evolve to appease the audience in very different ways.
Absolutely. And the nice thing is there are a wide smattering of different services that are available. I think it makes things also complicated, though. Right now, we see a lot of different streaming services coming into play, but Netflix is clearly winning the streaming war. Spotify is doing fantastic on the music end. YouTube is doing really solid. And I think what we're seeing from those companies, they're kind of the leaders in the space, is that they're eventizing, that they're creating new streams of revenue through podcasts. And really, they're all going to be focused on advertising. Advertising is going to be the big growth mechanism for these kind of leaders in the space. I think the rest of them, we're probably going to start seeing some consolidation around.
Right. And that's a great point that Jesse makes, Andrew. Is it almost overload when it comes to streaming services at this point? It feels as if there's so much coming at the consumer. It's almost difficult to discern where the action is that I want to be able to watch what is most important to me. There's just such a proliferation. What are your thoughts in terms of how this has evolved?
Jill, it's ironic because the roadmap in which streaming and, of course, the streaming wars came about was to initially cut the cord, right? To get away from the kind of forced enclosement of having to have all the channels there. And now the flexibility to choose what channels you want, what type of content you want. And now we're seeing this kind of almost pushback and move back towards, the cable of there's so many streaming opportunities available, and you're paying for things left and right. But to Jesse's point and to Rob's point is it also allows for this freedom to be able to leverage these new technologies, this predictive, analysis, and learning more about what these streaming companies are looking for and what the consumers' palates are like.
Well, Jesse, let's go back to that for a moment here, because just leveraging ad monetization, I don't think that's enough for consumers these days. They're expecting personalized experience and not getting slammed with ads. I don't think that's going to be attractive to viewers at all. There's not some sort of feeling of personalization there.
The advertising is going to just keep getting smarter. It's going to keep getting more personalized. And we are seeing we saw it on social media. Companies like Meta really understood how to target. And I think we're going to start seeing even more personalization through AI. The capabilities are just going to keep growing. So I do think branded content is growing. I think Gen Z is really accepting of brands being interwoven or as presenting partners with, or even the creators of the content. I think that we're looking at a world where ads are just going to keep being a really key component to the drivers of the growth of the streaming world. The streaming world is in a lot of ways saturated. So how do you get new users, or how do you grow revenue? A lot of that is going to come from brands. And so I
Right.
think personalized messages are going to be, the brand marketing side is going to just have to keep getting smarter and more targeted.
So Rob, let's talk about that from the moment from LiveOne's perspective when you think about consumer engagement, because what I find fascinating about this space is it isn't just a handful of studios or advertisers that are telling you what you are going to be able to watch, but the consumer really does have a lot of control here in terms of what they want from their streaming platform. So what are you doing to differentiate that on LiveOne?
Yeah, I mean, I think, LiveOne, we're a music platform, right? And we took our audio platform and we added live streaming and pay-per-view, right? Which made this plus experience. And then we were fortunate enough to acquire Podcast One and add this very robust podcast platform. And I think Jesse hit it right on the nose. Podcasting has proven that targeting advertising doesn't bother the consumer, right? If you start throwing oddball advertising in that really isn't targeting, it's very dangerous. Right. It upsets the consumer dramatically. I think there's going to be more and more consolidation. You're going to bring more of these together. It's going to look more and more the bundled packages, whether they're mergers or they're partnerships. You're going to see a lot of that. We've just expanded our content dramatically by putting it across one of the biggest streaming platforms and adding music and podcasting. Right. Just like Music Choice was in cable and satellite. You're going to keep bundling these together. But you're going to have to work. If you're going to have an advertising business, it's going to have to be a lot like podcasting. It's going to have to be targeted advertising. The consumer's gotten used to hearing the voice, the recognized voice of that product leader, that host of a podcast. The same thing when you have, whether it's a television show or a film, that better be that the advertising better be targeted at that consumer, or you're going to lose them.
Oh, well, I can tell you some of the text message advertising I get is totally off base here. So I think you can only imagine. Let's talk about that for a moment here, Andrew. When we think about technology and the advancement, leveraging emerging technologies like AI and VR, how do you think that is only going to encourage new revenue streams and encourage, the evolution of that experience?
It's a great question. I think to Rob's point, the freedom of choice and understanding your audience and understanding what it means to truly foster a deep connection with a brand and of course their technologies that they're using, right? AI gives a host of opportunities for these platforms to better understand their users and really understanding what they're looking at and then responding to it as such, right? When we're talking about bundled packages, do you want bundled items that don't really have that direct correlation with each other, or is it all part of that same thought, that same demand? And whether we're talking AI or augmented reality, the ability to apply practicality and put the user, the customer, almost in the shoes of the company themselves to understand, feel, get a better sense of what they're playing with, what they're looking at, and what they're absorbing really does add to the future of where this is going.
Right. Jesse, I want to talk about this. It doesn't even necessarily have to be the context of streaming. We could take it to, other areas that you cover as well. And we covered this a lot during COVID about developing these newer experiences for whether it's a streaming audience, a concert audience, any type of audience where there is that engagement, that inherent community, right? So how do you think these newer technologies can be leveraged to not only community build, but just change the way experience as we know it today?
Yeah, these are new frontiers, and these are the big opportunities when it comes to technology, when it comes to streaming, when it comes to content creation and fan experiences. I think blockchain provides an opportunity to create, in a lot of ways, a new way of approaching ownership in terms of ads, in terms of growth potential, in terms of ticketing, fan clubs, reward points. These are the building blocks and the frontier, even with like VR, going into the metaverse, experiencing these shows at Roblox or in Fortnite. It's so much more interactive. It's so much more encompassing. And when you start watching TV with your friends in a virtual world or with these AR, VR glasses, it's just next level. And it's coming, and this is where the next evolution of the internet is going to live.
Andrew, let me ask you a question from a regulatory perspective. And you and I have discussed this a number of times when it comes to who owns what content, what copyright looks like. I feel like that's still in its infancy, and we're trying to understand what that's going to look like.
Very much so. And we see that, with Warner Brothers and, a lot of these players in the music industry, right? Microsoft. And this all comes down to creating a fundamental but basic understanding across the board on what can be done, right? We need to identify what content we're putting out there and how it affects us. And I think until we have some type of fundamental regulatory framework that at least addresses this enough, that addresses ownership. What does ownership mean? What does it mean when you are putting something out there, right? I think where we are in this infancy stage is everyone has these arguments, right? All of these players have their arguments, but nobody's really listening. Everybody wants to be that top voice rather than working collaboratively on a structure where everybody can participate. So, we see it with copyright infringement. I think that's been the biggest topic that, we've seen. And I know we've talked about that.
Right. And Rob, part of it is that you have multiple jurisdictions that you're dealing with as an example. And if you go specific to streaming and remaining in compliance with different streaming taxes that you're seeing in different jurisdictions, how are you strategically adapting to that to maintain compliance and then also fulfill the financial objectives that you have?
Well, first of all, going back to the IP, I think it's critical. All of our businesses are built off the back of IP. If we don't protect IP in every way, shape, or form, if we don't protect the talent, the producers, the directors, the artists, the actors, if we don't protect them, right, we're gonna have a massive problem in the industry. That's number one. In terms of the taxes, unfortunately, most of it's gonna go upstream. It's gonna go to the consumer, and the costs are just gonna go up. And the costs are already skyrocketing. I just looked at my HBO Max. It's close to $20 a month now, right? You start to look at it, all of a sudden, you're no longer looking at $5 a month, $8 a month, you're 20. You start adding these up, you're going to be way higher than cable soon. So this is a really interesting time that content has become extraordinarily expensive. The cost of an hour of content is almost $1.6 million. That is unaffordable, right? Minimum wage is going up, cost of production is going up, the cost of everything is going up. So everyone's gonna have to look at carefully this, and the regulators are gonna have to look at it also. If they want to damage the relationship between the consumer and content, right, that's not gonna be good for anybody. So I think it's a really important reflection point right now to look at how this is going to be affordable to the consumer.
Yeah, it's interesting, Rob, because you keep bringing up the comparison to cable, and this is what I think of as well. We finally got to that inflection point where you started to unbundle, and then you had the birth of the streaming services. And honestly, I don't even know what's on what anymore. There's just so much that is out there. When you think about reruns and the platforms that support that, and then the different music platforms and so forth. But I think it's an important point that you make when it comes to subscription rates, and then you also have to think about engagement too. And these types of platforms, they survive on engagement. That's our most important KPI.
I hate to say it, and I hate to be the bearer of bad news. Cable and satellite were brilliant business models. They were great for everybody, including the consumer, right? The cost got higher, but they really weren't that unreasonable for the amount of content you were getting, right? So now what's going to happen is you have different methodologies of delivering this, but you're going to have to bundle them back together. If you don't bundle them back together, there's going to be, unfortunately, sadly, a lot of dead bodies out there, which is going to affect streaming networks. There's going to be some that go under. There are going to be some that are losing staggering amount of money. And at the end of the day, it means that there's less money for all these brilliant people creating IP.
Yeah. So Jesse, what does that M&A environment look like? Who do you think would be, the outliers to go? And then who do you think has the best opportunities in terms of, rather than having to build out organically, can, find some great opportunities out there to build out their stack?
Yeah, I think Rob really understands this space. It's like the golden era of content right now, but the prices have just gone up to a point where there needs to be consolidation. Rates are going up. Spotify raised their price from $9.99, which it held for almost 5-10 years. Now all of a sudden it's up to $10.99. They're going up even further, and it's okay to just start ticking that up a little bit. But consolidation is going to definitely be the inevitable. We are going to see like a bundling of it all. First one clearly is Paramount, right? That's the first one on the chopping block. Where's that going to land? I think we'll have to see, but there's already 3 bidders, and that's going to probably end up in it first to be moved over. But I think we're going to see most of these companies all falling under different guises or different offerings. I think Netflix is going to play ball, but I think, you know, Disney's trying to be a big acquirer in this space. And I wouldn't bet against Bob Iger, and Bob Iger we trust, but so far not so good. So I think it's really going to be up for grabs. I think a lot of it is going to have to do with kind of how interest rates play out and how the kind of macro environment goes. But ultimately, yeah, I think a lot of them is probably going to be in M&A bonanza.
Yeah. Well, I mean, we also have to think about a potential change in administration as well, because you know that is certainly going to impact, you know, approvals over these deals and, you know, what's considered a monopoly or not. But Andrew, to wrap up with you here, I feel like it also goes back down to having some sort of roadmap to understand how regulations and the costs there can impact the bottom line. Of course, it's not a one-size-fits-all solution, but I think having those frameworks in place are helpful. And it's a challenge that we see with all emerging technologies, whether you're talking about AI or digital assets. The technology moves so quick. And I feel like that's what we're seeing in this streaming space, where everyone's just kind of, you know, throwing something at the wall and get to the market first.
Right. And first and foremost, education. That's what we need. There's a lot of technical jargon out there, Jill. There's a lot of keywords, there's a lot of buzzwords, and people forget to teach to a general audience, where if you're learning something for the first time, you don't want to overwhelm them with all of this noise, but break it down in a way that they can resonate with and connect with. And that also goes to, how is the money being spent as these platforms are, you know, upping their prices, as this content is coming out? Where's their money going when they are paying these monthly service fees or these yearly costs? How is this money being spent? And I think with this new administration, right, they need to understand the impacts of these technologies. Our courts need to get a better understanding of these technologies. And we're starting to see that, especially with AI, in forcing the court to address these technologies, forcing them to learn them just enough to be able to create new precedent, so that when these platforms and these companies are coming together, they're coming in with a strategy that is bringing everyone together and not trying to alienate any particular market.
Right. Or stifle innovation, of course. Appreciate everyone's insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.
Thank you for having us.
I mean,